Right. I'm just checking to make sure everything is under control technology-wise, and we're about to start the webinar. Welcome everybody to this inaugural webinar on cryptocurrency being put together by Conrad Clark and Inspirational Risk. My name is Ayo Bankole. I'm one of the partners at Conrad Clark. And today our theme is cryptocurrency, emerging threats or opportunity. And we'll be discussing this from a Nigerian cryptocurrency landscape. Obviously, there's been a few things that have happened lately, especially culminating in the letter that the CBN sent to deposit money banks, non-bank financial institution and other financial institutions, prohibiting them transacting or working with people that are transacting and operating cryptocurrency exchanges within the financial system that connects to the bank. Obviously, this is slightly in contrast to what has been done by the Security Exchange Commission, who is in the process of saying that certain bitcoins or cryptocurrencies fall under the remit of their regulatory powers. What we are hoping to do today is to get a good understanding of cryptocurrencies and, for example, bitcoins, and begin to understand the threats and opportunities that this portends for Nigerian landscape. We have a wonderful and quite erudite speaker to share with us the knowledge and how Bitcoin works and its a good understanding of it vis-a-vis store of value, exchange of using it as an exchange mechanism, and also understanding the threats and opportunities involved in this particular space. Again, my name is Ayo Bankole. I will be hosting this and regulating this this discussion, and I hope that we really do get to grips with a number of topical issues concerning cryptocurrencies. Obviously, we have seen the price of cryptocurrencies go up significantly this year. It moved from about 19,000 to about 52,000 as we speak, and that is going down all the way to about 5,000 just about when the pandemic hit in sometime March of of last year. So this is a very interesting and very topical issue at the moment that is not particular to Nigeria. It is being dealt with in Europe, in America, Asia, and China. So it's something that we really want to get good understanding of, and us as a risk consulting firm we want to be able to begin to see how we can deepen the knowledge of this particular asset class and begin to get some understanding of the threats and the opportunities that it portends for us, and how we can work alongside organizations, the government, and people in how to manage that particular risk. A quick synopsis. I mean, risk effectively is the effect of uncertainty on objectives. And so if you want to really looks at cryptocurrencies, you're using it for a particular objective. You might be using it for store of value, or as a source of exchange, or whatever. So what we're saying is, once you understand the objectives you have, you can then begin to look at how you make sure that uncertainties from a point of opportunities and threats, does not really impact or disrupt you meeting those objectives as well. And that is the essence of risk management. Risk management is coordinated activities to direct and control an organization or person or objectives with regards risk, which is, which in this case will be the threats and opportunities, as it were. And so these are the kind of things that we want to be touching on today. And, hopefully we would be able to touch and concern a number of those things. And at the end of this, we'll be able to get better understanding of cryptocurrencies and the emerging threats and opportunity, particularly from a Nigerian point of view. And so without further ado, can you move on the slide to the next slide, please? And so we are Conrad Clark, and we are Nigeria's preferred partner to IRM, that's the Institute of Risk Management of the UK, and RIMS, which is the Risk Management Society of the US. So we literally cover the gamut of thought leadership and the development of risk management across the world. We are located obviously in Africa, Nigeria, in the UK, and in North America, and Malta. So our journey started in 2009 with a simple commitment to help individuals, organizations, and nations to create value and succeed in whatever they do, really meeting their objectives. That is our key selling point. And Conrad Clark, we have a number of things that we've done over the since we've been in existence. One of the key things that I'm very proud of is More and Me, which is our risk edutainment way of using edutainment to showcase risk management. We are the ones, that started and inaugurated the Nigerian Risk Award, and which has been going for quite a while now. This is to support and reward risk managers in Nigeria and potentially across Africa, to recognize them in thought leadership and good risk management structures that they have in place. There are a number of other things that we do. We have a software called Conrad RP, which we hope to help people manage their risk in a very systematic and innovative manner. And there are a number of sectoral risk stuff that we do, clinical risk and governance for the healthcare sector, education risk for and governance for the education and the government sector. We have energy. We have a particular knowledge base in energy resources as well, and a number of other sectors in Nigeria, in the insurance and the financial industry. We have a partnership with the Institute of Risk Management of the UK, University of St. Thomas in the US, and RIMS, RMS, which is what the new program that we're really pushing presently. A few house rules. We would be making sure, if you have any questions, please put it in the chat box and we'll be happy to answer them. We might not be able to answer all questions, but we would try our possible best to address all possible questions that have been raised. We might need to put them together as one group of questions, but do put your questions in the chat box as we go along, and we would address it when we do the Q&A. This slide that we're showing here effectively shows the Nigerian Stock Exchange growth from 2014 to present. You can see the graph of it going up and down, and the fluctuation and the volatility in the Nigerian Stock Exchange. And below is the graph of the way Bitcoin has actually grown over the last 9 years or thereabout, or 6 years to be exact, from 2014 to 2021. You can see how the graph initially was stabilized between the years of 2014 and 2018, before there was a spike in 2018. Then if it went down a bit, stabilized again, and it started rising towards, December of last year to the current level it is right now of $52,000. So it's grown from about 500 in 2014 to about $52,000 at the moment. We also have a comparison of how the naira to the dollar has actually trended over the same period as well. And again, you can almost see that the dollar to the naira is following some kind of trajectory upwards, which is the same thing that the Bitcoin has followed over that period of time as well. So the essence of this graph is to say that there is in any financial asset which or asset as it were that tries to mimic the market, there's always volatility involved. And so these are the things that we would be addressing during this our webinar by our speaker and through the Q&A, to be able to get good understanding of cryptocurrency and its effects. So we have our speaker here. His name is Damien Simon Peter. He's a software developer based in Waterloo at the moment, Ontario, Canada. He's done quite a lot of work in the ICT sector, and he's worked with some interesting companies like Andela, Ingeto, Akron, Black Ball Insurance, and he's a very, very interesting speaker who has deep understanding of AI, artificial intelligence, and machine learning, as it were. So we will be getting into the discussions right now with Mr. Damien Simon Peter, giving us a good understanding of cryptocurrencies and its threats and opportunity that it portends. Thank you, Simon. Over to you.
Oh, thanks. Hey, everyone. So I'm going to present my screen, and we can just jump right into it. I believe everyone can see my screen, right?
We can, Simon. We can. Thank you. Proceed.
All right, cool. So cryptocurrency, emerging threats or opportunities, and yeah. So before we go deep down into this, I'm gonna just give us all a brief history of money, and I'm gonna be really quick. So I'm gonna pose a quick question. So and then I'll answer the question. So just imagine what life was like before money, and say you're a baker. You had bread, but you want to sell some meat. What do you do? So historians have two views about this. You're a baker, you have bread, but you want meat. The two things you can do, according to most historians, is you could either use the barter system or the currency system. So in the barter system, you basically look for someone who wants your bread in exchange for meat, and that could be very straightforward once you find someone. That can also be quite challenging if you don't find someone who wants your bread for meat. And that's a problem known as the double coincidence of wants. So meaning the only value you have is the bread. You're looking for someone who wants meat, and that can be very challenging. The other alternative is a currency system where there's a social consensus on what can be exchanged for goods and services. So this could be animal skin, salt, in case of precious metal, gold and silver. So in this case, you basically would trade your bread for precious metal, which could be gold, which could be skin calories, and in turn you could use that and exchange that for meat. And this invention, it's one of the most remarkable inventions in human history, money, and this currency system. Where a lot of problems arise from also the currency system, which led to the current banking system we have, which was primarily due to the fact that carrying large coins and metals was a lot of challenge, posed a lot of challenge. And what you had was you had certain companies coming up with things called vaults, where you could keep your precious metal and you can be issued banknotes. in exchange for your precious metal. So this is like the early stage of the starting of the gold standard, where physical notes are backed by store value in the vaults by a bank. However, this created a lot of problems when you had individuals running their own banks, because some said banks were issuing more paper remittance than the gold they have in in the vaults, and this had to lead to government stepping in and allowing national governments to issue their own form of currency. And this is very important because it leads us to an era of fiat money. So remember, we've all gone from barter down to using items agreed based on social consensus of value, and we use that to trade among ourselves. And we move all the way down to paper money, which represents some sum of stored value we have in the vaults. And fiat money is interesting because that's what most countries are run by, Nigeria in particular, all African countries, and even the United States and developed countries alike. So what makes fiat money different from the traditional barter system or the example? The that in the year 1913, the federal the U.S. president back then, Nixon, made it illegal for you to own gold or own any gold certificates or security, and that created a lot of problem. And the reason that was done was because when you have banknotes issued by governments that is backed by certain amounts of gold, you can't print more money because that would be fraud, and you're going to have more money than the gold you have in store. So the government then made it illegal for ordinary citizens to hold gold or gold certificates, and then the concept of fiat money was introduced, which simply means money that is made to have value based on the government's decree. So the government decrees that yes, this money have value because we say so, not because of any other thing, not because it's backed by anything, but just because we say it has value. And what happened after that is that after moving away from the gold standard after World War II, one important thing to note and why the US is seen as a reserve currency is that the US forced the allied countries to accept their currency as the reserve currency, and that's why today we have most countries have their reserves in the US dollars. So one thing to see here about fiat money here is that fiat money depreciates over time, and you can see this nice graph here. If I were to give you $1 and you could time travel back 30 years ago, you can't exchange $1 for $1. They won't have the same equal amount of value. But for gold, that is not the case, because gold today and gold 30 years ago would still be the same gold. Although the government currently sets the price of gold, but in traditional sense, they still have the same set of value. So just to summarize everything here, so a few things we've noticed is that yes, money, there's a social consensus. Fiat money is, it's controlled by the central bank, and printing too much of fiat money can lead to hyperinflation in the case of Zimbabwe. And central banks have more control. They are not scarce, they can be printed at will. And one advantage also is that they're really, really, really cheap to print. It's cheap to print money than it is to mine gold. And it could be really good if the company has a lot of economic activities. Now, how about cryptocurrencies? So we've talked about fiat money, metals and calories and all this stuff. Cryptocurrencies, well, are sort of like money, but they're different. And they're different because they're digital currency or assets. Some people like to call them cryptocurrency, some call them crypto assets, but they're a form of digital currency, that can also be used as a store of value, just like you use gold as a store of value or as a medium of exchange. And just like the whole idea of a social consensus, meaning a lot of people come together and agree that this is going to be a good medium of, or a store of value, a medium of exchange, is the same concept you have here in cryptocurrency. So they're just digital currency, the currencies that exist on cyberspace, that's on the internet, that is secured by cryptography. Most of them have the underlying technology relying on what we call blockchain. So blockchain is, just think of blockchain as a tamper-proof storage mechanism, meaning you can't change, you can't mess around with it. So if you have like maybe an Excel file, for instance, you can edit the content of that file. But in a blockchain system, once data is entered, it is entered. You can't mess around with it. So when it comes to cryptocurrencies, they can be implemented by private, public, or government organizations. So if you're in the cryptocurrency space, there's some private-owned cryptocurrency like XRP, which is privately owned. There's a cryptocurrency like Bitcoin, which is popularly known. That is not owned by anyone. It's decentralized by nature. And there are also government-issued cryptocurrency, like the Chinese yuan, which is issued by the People's Bank of China. So government-issued cryptocurrencies are sometimes called CBDC, central bank digital currencies. So it's important to talk about Bitcoin here, and I'll be really fast with this, because when people think about cryptocurrency, what comes to their mind is Bitcoin. And because Bitcoin's revolution is based on 30 years of existing technology, created by an unknown individual or group of people. And the aim was actually to create a currency that was not issued by any central bank, that had a limit, that was decentralized, and people could use to exchange value and trade among each other. From the beginning of time, human beings have always wanted to trade. We've always wanted to trade with our neighbors, with people far away. One of the goals of Bitcoin is to create a form of digital currency that allows people to trade values on the internet without any government intervention. So a cool thing to know about Bitcoin is that it is decentralized, meaning it's not owned by one person. It's open source, meaning the code is public for everyone to see. It's secure. It's permissionless, meaning you don't have to register with a bank to own a Bitcoin wallet. You can set one yourself. It's non-manipulative, meaning you can't edit the records in it. And it's autonomously governed, meaning no one governs it, but a group of computers on the network decide on how things should progress. And Bitcoins are created through a process called mining, which is an important thing. And another thing about Bitcoin that's very important, and why people call it digital gold, is that there's a fixed limit of Bitcoin that would ever be in existence. So that's 21 million Bitcoin. And the last Bitcoin would ever be mined in the year 2140. Also, the amount of Bitcoin mined each year halves every year. So the first year was 10.5 million. Next year halves, and up to today, it keeps going by half. So you can see it has that gold qualities built into it. So we've talked about no one having control of Bitcoin, how it allows for cross-border transactions. Unlike gold, its value is driven by, demand and supply. So Bitcoin is created through a process called mining. It's just a bunch of computers on the network. Now, these computers are situated in different countries: South America, Brazil, Argentina, the United States, China, and it takes a lot of efforts to create Bitcoin, to mine Bitcoin. So basically, the computers on the network are given some sort of problems to solve, and in turn, they're being rewarded with Bitcoin. These Bitcoins that are mined are then sold to exchanges and individuals alike. So we'll do a quick talk on Bitcoin ecosystem. So when we talk about the Bitcoin ecosystem, what we refer to are the people involved in this Bitcoin life cycle. So you have the miners that I just talked about. Those are the guys who put in computer resource to mine Bitcoin. You've got the traders, you've got merchants, you've got holders. Holders are the ones who are holding on to their Bitcoin for long and are believing the value is going to rise. And you've got consumers, people will buy and sell things with Bitcoin. So we've talked about miners, what they do, how they convert energy into Bitcoin. We've talked about traders. So traders are ordinary people. Usually what they do is they buy and sell Bitcoin or other cryptocurrency on an exchange. An exchange is just like the stock exchange. And where you have different securities or cryptocurrencies listed, and people, the traders usually buy cryptocurrencies with fiat money. Like in the case of Nigeria, someone would use the bank debit card to purchase, some sum of cryptocurrency on a platform like Binance or Coinbase. And the important thing about this is that for those traders, you find them usually on an exchange. And there are two types of exchange. There's a centralized exchange. For a centralized exchange to operate in the country, they have to go through a process known as the KYC process, know your customer. And this allows the government to be able to track who and who buys Bitcoin, where they buy their Bitcoin from, where they sent it to, and all of that. So it makes it very easy. It reduces the risks that's involved in the anonymity of Bitcoin. So rather than making it an anonymous network, the KYC process makes it less of a hassle for the government, to investigate if people are conducting any malicious activities using Bitcoin. But on the decentralized exchange, like for instance BISC, you don't have to go through the KYC process. Think of the decentralized exchange like a black market where people can buy and sell Bitcoin with one another peer to peer without actually buying on a centralized exchange. So if a government puts a ban on a centralized exchange, people can take the route of, using a decentralized exchange. So that's one of the power of Bitcoin. It's like it's decentralized, and you can't just attack one system and think, oh, you've got rid of the entire network. You have to get rid of all the nodes on the network around the globe. And the merchants are people like Coinbase, and we've talked about them. Coinbase, Binance. These are the people who take fiat from people and allow them to trade on their platform. And then the holders are the ones who see Bitcoin as a long-term investment, and they don't want to sell. They just want to keep their Bitcoin till it reaches a certain price and perhaps they sell. And then the consumers are people who trade with Bitcoin. So you could have, there are a bunch of importers in Lagos, Nigeria, for instance, that rather than using the local currency, they could use Bitcoin to buy goods from China or the United States. Well, there are a lot of problems with Bitcoin, energy consumption, although there's been a lot of improvement in these areas. Ease of use is still a pain. If you lose your private key, you lose your wealth. There's a lot of problem like the 51 attack problem, where if 51% of computers on the network are invaded by attackers, it could bring down the entire network. But that is really, really unlikely, because for you to do that, you would have to have the computing power of Google and Microsoft combined. So quantum computers also pose a threat.
Thank you.
Quantum computers pose a threat to Bitcoin, but that also poses a threat to our entire internet as a whole. Very volatile, sudden increase, sudden decrease. Bitcoin or other cryptocurrencies can go up as high as 30%. Fall back low as high as 30%. You could see a 600 or a 1,000% in a year. You could see loss in also few minutes. So it's a very volatile industry. Just like you have problems with Bitcoin, there are also problems with fiat currencies. Like for instance, with fiat currencies, people are actually forced to accept them. They're not backed by anything. They're only backed by decree. But they aren't really backed by any valuable like gold and all of that. The also problem with fiat currencies, like people who control them are kind of central. It gives a lot of power to the central bank because they could print money at will, and that could cause hyperinflation. So, but let's talk about how Bitcoin is revolutionary and how Africans can benefit from this. One is cross-border commerce, which can, without any intermediary. Well, Bitcoin in itself, and not just Bitcoin, but the entire blockchain technology, which Bitcoin is built on, allows for cross-border commerce, cross-border exchange of value, not just anything but exchange of value, not just currency. The underlying technology that made Bitcoin possible, it just happened to be applied in finance, but honestly has a lot of applications, as we'll see. Another advantage is creating a counter-proof mechanism, making it very unlikely to duplicate records. Also making it less volatile than cash, digital, decentralized. It also reduces the cost for trust and security. So we're going to talk about blockchain opportunities for Africa and why this is very important. So the quick one is the electoral voting system. So current electoral system in Africa, in democratic states, so African countries that practice democracy, is free and fair. It's really far from free and fair. You go to the polling units, you cast your vote, you go back home, someone changed the record and sell your vote or modifies this. But just think about how blockchain can be applied here. Remember, blockchain is a tamper-proof database storage mechanism, incorporating the concept of decentralization and the privacy involved. You could have voters cast their votes and while maintaining their privacy, and they're going to trust the system because they know once their vote has been casted, no one can change that record. You understand? No one can modify or alter that record because it's already imputed into the blockchain. They are sure that, yes, I've casted my votes. I know who I vote for, and I could sleep at night to know, yes, I voted for this party, and no one is ever going to change that because it's on the blockchain. Countries doing this, one of the leading countries in this space is Estonia, that uses blockchain technology. And one cool thing they do is that they're able to run the entire governmental service with 90% capacity online 24/7 without actually needing a lot of people involved in the process. So you can see how revolutionary Africa should adopt or look into implementing some form of blockchain electoral voting in some offices, maybe local government offices and the likes. Another opportunity is with trade. If you're ever involved in the trading, whether it's shipping, importing of items, exporting of items, there's a lot of process involved, a lot of papers you have to sign, a lot of contracts involved. With the whole idea of blockchain and smart contracts, smart contract is also an emerging technology in this space, which is popularized by another cryptocurrency called Ethereum. And basically, all smart contracts they're just self-enforcing legal contracts that are digitized. So in a traditional shipping sector, you could have a case where someone says, if I have 4 containers being delivered, pay so amount of money to this this shipping company. And in a traditional sense, some companies are late on payments, the defaults on certain things, some documents are unsigned, some values are altered. So just imagine how using smart contracts and blockchain, how this can enhance carrier compliance, meaning everything is put on the blockchain in the smart contracts. Speed, you're going to eliminate a lot of people because you don't need lawyers that much. Once you've coded the smart contracts, there's going to be very little need for lawyers. It's going to lower cost, operational cost. Communications will be very effective and improved, meaning once a party defaults on the contract in real time, the contract kicks into effect immediately. So you don't have to wait to call the lawyer to say, let's go to court, and everything just happens immediately as soon as one person or one party defaults in that contract, or perhaps meets any requirements stated in the contract. So in the African Continental Free Trade Agreement, I envision we're going to have this problem, trading with different countries in West Africa, East Africa. But blockchain technology has a lot of potential to solve some of this problem and to learn from existing solution and see how that can revolutionize this space. And one leading company in this space is a company called Pership, and they're actually looking at how they could use blockchain and smart contracts to make it really, really easy for things like trade, clearing, custom shipments, and all those stuff. So a lot of opportunities here. If you take away the idea of Bitcoin, but just look at the potential of the technology, there's tremendous amount of advantage. Now, other blockchain opportunities for Africa, we've talked about trade, we've talked about electoral voting. Some things I didn't mention include things like it has a lot of application outside of finance. Finance just happens to be one case, but think about healthcare, think about land ownership. There's a lot of fraud that goes on in land ownership and change in contracts, change in terms and condition. But just imagine if this were put in a smart contract on a blockchain. The contract is there, it's self-enforcing. You don't need any legal entity. You need minimal lawyers' intervention. Think about divorce cases and how lawyers can rip people off. Think about how blockchain can help in those areas. So they have tremendous applications, as also when it comes to transactional costs. They could lower the cost of transactions. Think about a central bank issued currency, digital currency. It's going to be a lot cheaper. It takes a lot of money. It costs more money to print money. But just imagine if we make that switch into digital currencies, right? It's going to be a lot cheaper. It's going to be a lot easier to manage. Transaction costs would be quite low. Interbank transfer and trade would be really, really, really fast, right? Moving money between banks would be fast. Auditing, managing funds, people embezzling funds. So with fiat money, you have people, criminals, literally buying real estates using fiat money. But like you could actually audit and automatically reconcile accounts if you put things on the blockchain. So apart from that, the economic advantage is that this market is valued at, currently $1 billion as of 2019, and it has a average growth rate of about 6.18%. So you can see how that is possible. So another advantage for our oil sector and how it can benefit from blockchain is, so one of the interesting things about, say, mining Bitcoin, for instance, is that most of these miners, they try to use alternative source of energy for mining Bitcoin, meaning they go to areas where electricity is really cheap and they use cleaner source of energy, to mine your Bitcoin. And the Nigerian petroleum industry can benefit from this advantage. A lot of petroleum byproducts can be used, can be sold for cheap, and those byproducts that were probably wasted can be outsourced to some of these mining companies as well. And I'm going to wrap up with the crypto threats and risks. So despite all the advantage we've talked about and the potential of cryptocurrencies, one thing I would mention is, yes, Bitcoin is more than 10 years old. However, it's still a new technology. It's still an emerging technology. We're still in the infancy. Think about Bitcoin as the early days of the internet, when the internet was slow, dial-up connection was considered fast. There was no Facebook, there was no MySpace. All you could do was send email. Nobody saw the future down the road 10, 15, 20 years from then. No one saw that future. But a lot of money was put in. Some companies won, some companies gave up. The companies that didn't jump on the whale lost and couldn't compete in the digital space. But one advantage it did do was it created a lot of wealth. So the internet created a lot of wealth. Bitcoin, cryptocurrencies, blockchain, smart contracts, all these are emerging tech. They're still pretty much new. And it's still early, right, to get in on it, to study, to look into this space and see how it can benefit you. So threats like, government regulations. The problem with government regulations, as you can see, is anywhere government regulations is passed, it's like when you ban cryptocurrency, it usually has the opposite effect. It increases the volume of trading in those countries. You could see China, for instance. You could see India, despite the ban, increase in trade is still going up, right? And this problem is usually caused by when people lose faith in fiat money. They lose faith in the government. You see that the naira is depreciating every day, right? The rupee is depreciating every day, and people are looking for other means to store their value. So yes, cryptocurrencies are really, really high risk. They're highly volatile. But again, volatility is something some traders love. If you're a day trader, if you're in Wall Street, most of those guys like volatility. So in the stock market, yes, there's volatility. Even in crypto, it's really, really high. So take the volatility in the stock market and multiply it by a factor of 10 on crypto. So it's really, really high. So another problem is no gatekeeper, cyber threats. When you lose your private keys, you lose your wealth. So in a traditional banking system, you store your wealth in a bank in form of money. If you lose your password, you can walk up to the bank and they could, ask you some questions and reactivate your account. On a blockchain, it's different. You lose your private key, you lose access to your wealth for life. So it's irreversible, it's susceptible to hacking, it's easy to make mistake, lots of fraud, and still largely unregulated. So when I say it's largely unregulated, meaning there's still unclear regulations on what the future should be. I wouldn't be surprised if Nigeria would come tomorrow and say, okay, we're going to pass in better regulation or regulatory laws about crypto and how you can deal with it. To wrap that up, I'll wrap up with this, this sheet. Despite the risk, you have Fortune 500 companies still in moving some of their treasuries into and having Bitcoin, for instance, their other cryptocurrency, but Bitcoin just happened to be the first mover. Despite all these risks, you have a lot of companies having Bitcoin on their balance sheets. Now they have reasons for doing this. They have strong risk measures in place to manage this volatility of the market. So they're not just buying blindly. They have plans in place. They have perhaps have exit strategy in place. Perhaps they have long-term goal in place. While it's very easy to see the profit side of things where people are making 50%, 100%, they also downside when the market takes a dive. So, but again, these companies have strong risk measures in place. Perhaps there are also tax advantages for getting into this space. So despite the risks, there's a popular saying that says with great risk come great reward. So sort of it like in the case of Bitcoin. So despite the risk, you still have companies investing in it. So I'm going to wrap up with saying thank you. And one thing is constant. People say two things are constant in life. One is taxes and debts. And I'd like to add and say change is also another constant. Over time, we've seen different, forms of money, from barter to exchanging of calories to metal to paper money. And it's one thing is really, really clear. As you can see, the pandemic has proved that even exchanging money can be risky health-wise. It is clear that this is a future that has come to stay. There are a lot of uncertainties, a lot of risk involved. Some companies would succeed, some would fail, some cryptocurrencies would never be heard of. There are a lot like that. But the thing is, this is still an emerging market, and one can look into it and see how they could either benefit from the underlying technology or see how they could ride the wave to balance out their losses. So thank you very much for listening. And that brings me to the end of my presentation. Thank you.
Thank you, Simon. That was a very good
Mr. Bankole, you need to unmute your mic.
sorry. Okay. Yes, this is what sometimes happens in this team stuff. So sorry about that. We're about to get in. We're now going into the Q&A session of this event. Thank you so much, Simon, for a wonderful and erudite presentation of cryptocurrency and Bitcoin in particular, and how the threats and opportunities it actually offers. And so there have been a few questions in the chat box, and I'm going to begin to get into it, and so we can generate some conversations here. The first question here is, what's your view regarding the activities of cyber hackers with regards to Bitcoin? And so, because one of the key things that I want, some things that have been topical has been the issues of hacking, cybersecurity, loss of private keys, and so perhaps we can even extend this question to the security issue of cryptocurrency and Bitcoin, and what measures have been put in place over time to begin to address and mitigate those threats.
Yeah. So just so I get the question clearly, the question is, what measures have been put in place to minimize cyber attacks and loss of private keys and
yes,
those kind of stuff, right?
Yeah. And sorry, Simon. And then just to basically talk about cyber hacking, what has happened, recently or in the past, and just to make people aware of this particular issue.
Yeah. So one thing I would say with Bitcoin is, or especially, is the fact that it is almost impossible to hack Bitcoin. Right?
Almost impossible. Almost possible. Okay.
What gets hacked is usually the exchange. So there's a popular saying in the crypto space that says, not your keys, not your money. So what this is, when you trade on an exchange, usually they manage your private keys on your behalf.
Correct.
And they create their own wallet for you, right? So what happens is that when a popular exchange like Mt. Gox in Japan that was hacked, it wasn't the Bitcoin network that was hacked. It was the Mt. Gox exchange. And that was far back then in 2010. There were no such thing as 2FA, like two-factor authentication and all this stuff. And these were people who just had some bunch of money and ran into the space without understanding, security. One key thing to also mention is that in the entire life cycle, Bitcoin has never been hacked. You've had other cryptocurrencies that have been hacked, but the Bitcoin network itself has never been hacked. Ethereum has been hacked. There were vulnerabilities in the code, but Bitcoin itself has never been hacked. So now, but over from 2010, when this Mt. Gox incident occurred, you've seen different movements in the form of things like two-factor authentication, verifying email signatures. So some of these companies, upcoming companies, are putting several measures in place to ensure that, before you gain access to any digital service, you provide some form of, digital signature, a way to validate that you are the person in charge here. You understand? It could be a form of, okay, once you enter your password, we're going to send you some verification code to your phone, and you probably need to use that to authenticate. So things like this gave birth to some of this, this security mechanism. But some people also try to take things personally, whereby they have a computer, they download maybe a crypto wallet, for instance, a Bitcoin wallet, and then they buy the currency from an exchange, they move the Bitcoin to their own personal wallet, and then they save that Bitcoin on a computer that's entirely not connected to the internet, or a computer that has a lot of firewall, right? So taking certain security measures, like ensuring that your private keys can easily be remembered, they are stored in places that are secure, that can go a long way to prevent hacking.
Okay. So obviously you're aware of this issue of the Nigerian CBN prohibiting banks and other financial institutions in working with organizations that run crypto exchange or trading. And so, having talked about all these opportunities that we've talked about, and the fact that, in Nigeria, we do almost, $500 million worth of, crypto transactions at the moment. We're top 10 in the world in this. It's providing livelihood to a number of people. Why do we think, or what are your views about, the issue about the government prohibiting this this kind of interaction by the financial institution with, the exchanges and the traders, as it were, and which is also not in line with what the Security and Exchange Commission is trying to do in the way of regulating this cryptocurrencies?
Yeah. So one thing I would mention is, when I saw the initial, SEC by the letter issued by the SEC, I think that was 2017.
Yep.
They deemed Bitcoin as a security, not as a currency. And the way Bitcoin operates in itself, I mean, some countries say it's a security, some say it's a currency. But most people hold on to Bitcoin just like they hold on to gold.
Mm-hmm.
right? So I think this Security and Exchange Commission did have some sort of, I'll say, good plan in place.
Mm-hmm.
And I would say they did had why I like their approach
Yep.
compared to that of CBN was that with that measures, there would be proper regulatory, things put in place that would also protect day traders,
Correct.
right?
Mm-hmm.
And also the operating exchanges. These are companies that sell, that operate an exchange, whether it's, I think, Lumo, and then Binance and the rest.
Yeah.
They're going to ensure that they check certain boxes that ensure that the investors are protected,
Mm-hmm.
meaning day traders,
Yep.
boxes that ensure that no fraud is done, some
Mm-hmm.
form of insurance in a way.
Mm-hmm.
That was one cool thing. But I think some of those companies maybe didn't. Of course, if you're going to accept Bitcoin as a security, you're going to pay a lot of fees to the SEC. A lot of fees are required to be paid, to be paid, just to allow Bitcoin trade as a security. But for the CBN, I think the fear stemmed from the fact that if you look at who are the future leaders of a nation,
Mm-hmm.
these are young people,
Yep.
and Bitcoin by volume is traded by young people,
Mm-hmm.
and have a case where young people who are somewhat technically savvy
Mm-hmm.
are losing trust in the system.
Yep.
And the reason why they're actually losing trust in the system is there are fewer economic activities going on in the country.
Mm-hmm.
Uh, Bad
Mm-hmm.
roads, no good health care,
Mm-hmm.
a few jobs,
Mm-hmm.
and see day trading. And one thing I tell someone is if you can really trade cryptocurrency, like you're really good at it, you can trade any stock. These are guys who have never understood what it means to buy and sell shares, but the opportunity that things like cryptocurrency has brought, it has created a new way of democratizing the stock market, or the idea of buying and selling assets. Just imagine someone who is very successful with buying and selling crypto, and the funny thing is most of these young people who trade crypto has never bought a single stock in their life. They've never traded on the Nigerian stock exchange. Now imagine the knowledge they've gained from this field and applying that to the stock markets. So I think the fear from the CBN stemmed from the fact that the younger population, and coupled with the NSAS movement, are more technical savvy, and they're moving away from trusting the Nigerian issued currency to another form of currency, which is seen as a threat. You're muted.
If you're advising the CBN, what would you be telling them to do now? Because obviously, this young people, like you said, the younger generation are the doyen of innovation, and we've seen this from what has happened with Paystack, Flutter Wave, and the invert, the deepening of fintech in Nigeria. And we're just, I believe, if we haven't surpassed Kenya, we're very close to surpassing them. And this is only happening in a few years. And so, is this a good thing for the government to be doing instead of supporting the young people to continue in this mode of innovation? Is this could this take us backwards in a way? Backwards, backwards in the curve when everybody is moving ahead of the curve. Because one can say that China had the same issue that we were having now a few years back, but they have now even gone as far as having central bank digital currency. And so why are we 5 years behind when these issues that the likes of China had before, they've moved on and they're now at the forefront of cryptocurrency?
Yeah, that's a really good question. I think my advice for the CBN would be to ride the wave. I mean, just imagine what it would be on the headline if Nigeria in Africa becomes that first nation that moves from paper money to, for instance, central bank issued currency, digital currency, right? So first and first is payment is really hard in Nigeria. A lot of unbanked people. I personally had this connection with ordinary people. So you have a lot of these traders those petty traders that accounts for a huge volume of economic activity. So these are people hawking by the roadside, people selling by the roadside. Most of them are unbanked.
Mm-hmm.
They're unbanked, and now if you were to marry that with technology, the cost of a smartphone is reduced over time, and the Nigerian market is infested with a lot of cheap smartphones that are actually good enough to do a lot of stuff. The cool thing with the Chinese digital currency that I liked was, despite as how developed they are, the Chinese issued digital currency works offline. And this is an opportunity to get more people into the banking sector, to also cater for the unbanked, to provide a cheap form of banking to the common people. So I think the CBN shouldn't have seen this as a threat. Yes, it needs more regulation. It needs a lot of regulation, no doubt.
Mm-hmm.
Important, so criminals don't walk with Swiss bank accounts in their pockets. I mean, one important challenge is, imagine if you have 1,000 Bitcoin and you're going through border patrol. It can be, and then the usual limit is 10,000 of
Mm-hmm.
US dollars and all of that. But now with Bitcoin, that can be hard to control, because people can be moving into countries with millions and millions of
Mm-hmm.
dollars,
Yep,
right?
yep.
But
Yep.
but yes, but if you look at the bright side in a country like Nigeria, where a lot of people are unbanked, where people have to stand in queues to take money from an ATM, there's a lot of utility central banking creates by embracing this technology. I mean, yes, Bitcoin is some sort of a thing on its own, but looking at the underlying technology, like, how can we leverage the concept of Bitcoin, to prevent frauds in Nigerian banks, to ensure we keep more people into the banking system. Smartphones are now cheap; people can afford them. With 5,000, 10,000, you get a really good smartphone. And how can we ensure that these people are banked and they could exchange money quickly, smart in a smart way? So I think the CBN should look at it from an innovative aspect.
Fantastic. Simon, our time is spent. I still have two quick questions that I want you to address. If you could just address these questions in 1.5 minutes each, I would be very, very happy, appreciative of that. One of the questions here is about, are there ways to hedge and mitigate against volatility in crypto? And also, maybe we can tag this question on top of that. For companies already carrying these assets, how are these transactions valued and audited?
Yeah, so are there ways? So yeah, I mean, when it comes to crypto, this is not investment advice.
Please, yeah. We're not giving investment advice, as Simon is saying. We're just giving an opinion here. Yeah.
Yes. So there are several ways to mitigate losses. There are investment strategies like lump sum, where you watch the markets, the price go down, and you put a particular sum of money. Take, for instance, you have $5,000 and you want to buy some sort of coin, right? And then you watch the market, it goes down, you just put all the money and buy this. There are also other alternatives like dollar cost averaging, where then putting lump sum, you put in a certain amount over time.
Over time, yep.
This can be rewarding. This can also be very expensive. It all depends on the strategy. But I would say the most important thing is having an exit strategy. It's very, very important. It could be, I'm only looking for 10%. I'm only looking for 20%, or I'm going to take my capital out once I earn a certain percentage. And also taking time to educate yourself on whatever crypto asset you're buying. So for instance, if you're buying Bitcoin, try to look at who's around that community. If you're buying Ethereum, try to understand what the project is about. If you're buying Ripple, Theta, for instance, Ripple would have been one of the best cryptocurrency because it's privately owned. Its goal was to replace Swift, and it's way, way faster than Bitcoin and Theta Bitcoin and Ethereum combined. However, they have a lawsuit that they've been dragging on for years, which has affected the price. So time to understand what is going on in whatever. It's like trading stocks. If you buy
exactly. So again, what in summary of what you've just said is the same similar mitigations and hedges that you would normally have in other investments. Stop gaps and dollar cost averaging. Basically, knowing the purpose behind the investment, understanding the landscape behind the investment, understanding the effect of demand and supply on your investment, and understand, because people might say there isn't an underlying asset backing cryptocurrency, but there are underlying attributes that you can learn and you can begin to understand that guides the value of cryptocurrency. And then the last one I'd like to touch on is the fact of it being very good for e-governance. And are we actually missing a point here? Because a lot of the problem in Nigeria is the cost of governance is very high. And if we can go down the route of Estonia, we can significantly reduce the cost of governance, cost of land registration. All this NIN stuff we're doing can easily be done. This is the national I don't know what it is, but the NIN registration that is costing a lot of ajibaji at the moment. That would have been something that if you deploy blockchain technology would be perfect for. Can you give us some kind of views on those things, please?
Yes. One thing every government or any civilization should know is that when technology comes, it comes with full force.
Yeah.
And it doesn't stop. It just keeps going. And technology has always been known to be a disruptor. The internet disrupted traditional media, traditional print media. It disrupted content creation. People can have their own individual channels. The number of people who watch local channels are declining by the days. You have youths creating content on TikTok, creating content on, and you see this trend. So what does it tell you about how technology is going? Well, there's one big risk with investing in blockchain and in a country like Nigeria is because it's going to disrupt a lot of sectors and a lot of people are going to lose their job. With a country without a lot of, just think about deploying blockchain in the government sector. It's going to reduce labor requirements by a huge factor. Of course, it's going to save the company lots of money because the country rather lots of money because, you're going to have a lot of money. You're not paying staffs. Everything is automated. Computers are involved, smart contract blockchain. It also takes a lot of job from people like legal practitioners, because with the idea of smart contracts, the goal is to minimize, legal interference as much as possible. You understand? So one thing is certain is that, and another certain truth about technology, it gets cheaper over time. So as these technologies begins to evolve, it will have no choice but to eat its way into the Nigerian ecosystem one way or the other. That is one thing I will tell you. Mm-hmm. It could be a case where other countries want us to have some sort of blockchain infrastructure so they can easily integrate with us. It could be a way whereby if we don't do that, we can't trade with the outside world. So one way or the other, it is inevitable. This technology will take one form or the other and have a role to play in the future of Nigeria so far. So yes, the government should look into this opportunity and see how we can minimize the risk of people losing their job because of technology is known to be a disruptor, and see how they could create new source of economic activity.
Fantastic. And so we're coming to the end of this webinar. Our dear guest has said, with great risk comes great opportunities, and like debt and taxes, change is another constant. What we say at Conrad Clark is we always dare to dream. And so we do not shy away from addressing threats and trying to actualize opportunities. And so in summary, cryptocurrencies, has its threats, things like volatility, fluctuation, the convertibility of it to cash, hacking, potentially systemic risk if proper regulations are not put in place, and even personal risk like loss of private keys and stuff like that. But on the other side, it does also have the push of innovation in our financial industry, and it can actually take our fintech industry to a higher and higher level. Nigeria is one of the top 10 people that trades currency and uses cryptocurrencies in the world. We don't want to basically begin to go backwards and become behind the curve. This can open up a lot of opportunities for the insurance industry, digitalization of both e-governance and our financial system, and a number of other sectors. And this can help us with deepening of trade across Africa with this new after stuff that we have in place. So this is, there are obviously threats that this portends to us, but there are huge opportunities that if we ride on it, like our speaker said, ride on it, it can actually take Nigeria and put us at the forefront of this innovation, and like countries like Estonia. And so we welcome you to join us for a second webinar on this topic, which we will be holding next week. This is going to be talking about the regulation of regulating blockchain and ways to go about it. We have a wonderful speaker as well, very knowledgeable lady, Modupe Ajibola, that would be taking that webinar. So please join us next week, Friday, the 26th of February, same time, 3 p.m. West African time for this webinar. We also have a number of upcoming events in March. We've got the Enterprise Risk and Performance Management Fundamental Workshop. We have the Advanced Enterprise Risk Management Workshop. There are other ones. Could you move on the slide to the next? We've got the Cyber and Data Security Risk Workshop also happening towards the end of March, 29th to the 30th of March. And an interesting workshop, which I particularly would endeavor and would appreciate that if you can join, would be the strategy to execution, because in every strategy, without good execution, the strategy is of no benefit. It's in executing the strategy to perfection with excellence that you get the benefit of such strategies. Please join us for all these workshops in March and April, and so that we can jointly together continue to deepen the understanding and the education of risk management in our country, Nigeria. And please, we have a couple of other things that we're doing. Visit our website and continue to follow us on Twitter to get to see what new opportunities and new workshop webinars and ideas we're sharing with this community. Thank you so much. I would like to thank our guest, Mr. Simon, for wonderful and erudite presentation and answering our questions on cryptocurrency and the threat and opportunity it portends for us in Nigeria. I look forward to seeing you all again at our future webinars, and hopefully I hope that you will be able to join us next week. Thank you and God bless.
All right.
To the welfare and prosperity of the king.
To the welfare and prosperity of the king. You really must be serious for you to come all the way here.
No, we all have our part to play in this great kingdom. Oba the dollar, our king, thirsts for more lands.
Man, I have heard you, but I will not leave until I'm satisfied that something is done.
And do they know about the disappearing?
Disappearing?
But the mother cannot sleep when sickness keeps her children awake. I will not rest till justice is served.
It is fear that really tries to conquer us all.